you have to understand that, first of all, that the consensus has an opinion. And you have to understand that the consensus is not a moron. So much of the time, the consensus is about right. Now, if to do better than the consensus, you have to think differently than the consensus, it means you have to find the times when the consensus is wrong. It doesn't mean that the consensus is always wrong, and just thinking differently is the key to success. So you have to find the times when the consensus is wrong, and then you have to think differently, but not just differently and better, because you could think differently and worse. So it's not just holding a non-consensus opinion. That's not the secret. It's holding a correct non-consensus opinion when the consensus is wrong, which is not all the time. And I think I mentioned in the book that when my son comes to me, who's a budding hedge fund investor, he gives me an idea, a stock, a macro trend, or something like that. The first question I always ask is the same. And who doesn't know that? That's really the question. When you think you know something, the question is whether the market knows it too. And if it does, then your idea has no relative superiority.